Hey everybody, it's Pete. Welcome to today's episode of Stocks for Breakfast. It's Wednesday, June 17th, 2020. Days are blending in. I don't know about you, but I'm tired of being quarantined, but it seems like the smart thing to do. I don't even know what you can trust right now for what's actually happening. But anyway, hope you're being safe. Hope you're making money. I just first wanted to congratulate some people in the boot camp yesterday, specifically Chris and Michael, who had some really good opening trades yesterday. Just awesome to see. Again, if you're not in the boot camp, I don't know what you're waiting for. This is a really challenging market. It's become a lot less obvious how to make money right now, where the straight move to the upside just vanished in a couple of days. We are trading a news-driven market right now, which is definitely challenging. But, and I want to make this very clear, if you are prepared, which is a huge part of what we do, heading into the day, heading into the week, knowing what you're going to do prior to the stock market opening is where all the stress gets eliminated from trading, because now you're just basically sitting back and saying, I know exactly which stocks I'm looking for. I know exactly where I plan on entering. I know exactly what my profit targets look like, or if it's moving in my favor and starts to pull back, I know exactly what I need to do. So congratulations to everybody in the boot camp. Yesterday was a really exciting day because it was not an easy day to trade, but we were so prepared heading into the day. It was just exciting that people weren't in a rush to jump on a volatile opening. We actually talked about profit taking as soon as the market opened. A lot of those stocks were just way, way overextended what they normally do. And specifically, we're talking about Boeing, where we actually discussed how far it had moved in just 2 days. And lo and behold, it opened up significantly higher. We'll take a look at that in a second. And then pulled back. I think it was $14 in the first 90 minutes of the day. So those of us that were swing trading and technically usually hold one trade, buy it today and get out tomorrow for those easier profits, it was just a gift. It was an absolute gift. So I'm very happy to see that we had a really good plan. So again, if you want to find out more about the boot camp, click down. It's such a tiny investment for the lifetime skill that you get. It's crazy. And I'd love to have you in there. There's nothing stronger for learning than to actually be able to ask questions while you're actually placing your trades. And you actually see my live trades too, so that's kind of exciting as well. I tell you exactly where I get in, exactly where I'm getting out. I tell you why it's a good trade. If you call out a trade and it doesn't really follow the process, we'll discuss it. And that's really the whole point. You want to be able to learn to be the asset. That's kind of the phrase that we use all the time, is you want to be the asset that is making money, very much like those computer programs, the algorithms that spit out winning trades all the time. Even if you make 1 or 2 trades a week, you want to be the reason that your account's going up or down. That's a skill that you have for the rest of your life. So definitely scroll down and see how other people are doing in the room too. That's a big deal as well. So anyway, today what we're going to talk about is we're going to talk about how to make easy trades even if you're a beginner. That's a big thing there, because one of the biggest things that I see, especially from new traders coming into the community, somebody who absolutely wants to be involved, who's tired of working a job that they really can't stand, which, by the way, I do not recommend quitting your job during the pandemic and becoming a trader. We're in a unique market right now. Have profits that last a few months, and if not longer. And quite honestly, I'm doing this a long time. If you have another full-time job with benefits and all that kind of stuff, stick to your full-time job and learn actually what we're going to show you today, which is a really simple trade that's easy to follow, easy to track, and just as importantly, easy to find, which that seems to be the biggest problem with newer traders, is overwhelmed. There's so many things you could possibly be looking at. Today we're going to eliminate a lot of that, but I want to discuss something very clearly. I started the video out talking about helping people in the boot camp who had winning trades and how to manage them. What we're going to talk about today is a trading setup. But ultimately, the difference in somebody who's massively, consistently profitable is what happens between entry and exit. That's where the money's made. And that's when you separate yourself from, you know how to read charts, to somebody who can call themselves a trader. And a trader is somebody who actually pulls money out of the market. So that spot in between entry and exit, we're not going to cover here, obviously, but we are going to go over the trade setup. So again, if you're finding good trades and you're not making enough money, you're missing something. There's a little gap in between where you want to be and all the way up here. So we're going to go to the charts. Again, this is a strategy that I use to look for swing trades during the week. We might call them cash flow trades. So it's something that we usually look at from 1 week to the next, 1 month to the next. And as long as the situation remains valid, you should be holding the trade. But what's also kind of cool about the strategy is understanding exactly where you would be getting out of the position and what that looks like. So we call that tape reading. And if you're a regular watcher, viewer of the channel and you subscribe, which by the way, please click down and subscribe if you find these videos helpful. You'll know that everything I do is to help you move from chart reader who might be struggling and not making money, but you're really working hard, to somebody who's a tape reader who learns how to put all those pieces together and build a great argument. But then the final step after building that great argument, which by the way, when you build that great argument, you reduce all of your losing trades or bad ideas. Actually, let me correct that. When you learn how to build a good argument, you reduce dramatically the bad ideas, and then you have the discipline to stay away from them because you realize that's why you're not getting paid. Those trades that you can look at after the fact and say, gosh, that was stupid. Why did I do that? So you move from chart reader to tape reader, where you're building the argument. And the last piece where you move from tape reader to trader is where you make money. That's why we're doing this, right? Nobody opened a trading account to be the world's greatest chart reader. We opened a trading account to see our account go like this and have some extra money and feel really confident that we're the reason that account's going up or down. So what we're going to take a look at today is what I call the world's easiest strategy to trade for some cash flow. So let's head on over to the charts and we'll do some examples. So what most people normally look at is you look at a daily chart. So you can see here, this is a daily chart of Twilio, or we could take a look. We'll use the SPY as an example. We're actually going to also take a look at Apple because it's an extreme example of something that was following the method that we're actually going to talk about today. So most people look at the daily chart, and there's nothing wrong with that. But if we're looking to hold a little bit longer, we're actually going to bump it up a little bit to other charts. So you can see here we have the weekly chart, and we'll zoom this out. And what's striking is if you take a look at this chart of Apple, and then you take a look at, we go back to the daily chart of Apple, you see all these pullbacks and red candles and tiny candles, right? But then you go to the weekly chart, and you're like, oh my gosh, this thing is straight up for weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks in a row. And you'd be saying to you, and then you even go over here. What in the world was I looking at? Why was I not just holding this stock this entire time? And again, we'll talk about some other stocks. Same thing here, right? What were we thinking? Well, what we were thinking, and this specifically applies to some of us who don't want to necessarily be watching every tick. Maybe you want to be swing trading. The strategy really comes down to this. It's our job, first and foremost, to find a stock where the smart money is doing something and it's obvious. So what that means is you need to stay away from these types of candlesticks, where I call them melted candlesticks, where they open and close in essentially the same place. So when you're immediately looking at a chart, you want to find something that's moving. You want to find something that's in play. And us, the retail money, despite what they're talking about with Robinhood traders on TV, that's a bunch of garbage. You need to find institutional money, because institutional money, smart money, the collective idea of the market at that time, and that's really what the smart money is. The smart money is reading the tape to learn what is the most money at this moment doing at the same time. That's the smart money, because the smart money is moving the market that creates these large green candlesticks or the red candlesticks, right? So what ends up happening is if we focus on the monthly and specifically the weekly charts, but let's stick to the weekly charts right now and we'll keep an eye on Lulu. So you can see here for 2 consecutive weeks, the smart money, again, that's the people in the market, institutions, hedge funds, people like us, all collectively, algorithms, at that moment are doing the same thing. But the trick here is, how do we recognize that? So we're going to go over here to this 3-week period. Actually, 1, 2, 3, 4, 5 weeks of buying in Lulu. What you're going to be looking for is consistency of opening at one end and closing on the other. At a minimum, you want to see it closing on the high. So these are the weekly charts now. That represents Monday through Friday. And you want to see what I call well bid. So well bid is higher highs and higher lows. And as long as that is remaining intact, where you're well bid, well bid, well bid, well bid, as long as that remains where you well bid and the price is trading above the open, which is why the candlestick is green. So that's, excuse me, that's where it opened and that's where it closed. That's what makes it a green candlestick. That's where it opened and that's where it closed. That's what made it a red candlestick. So as long as your weekly charts, see the big W here, as long as the weekly charts are well bid and trading above the open, so that means well bid and in this case green, you can continue to hold that stock long until you see it change, which it did here. So last week it opened higher, but most of the week it was trading below the open. So that would be a signal to start getting out of the position. If even, maybe even get out of the entire position. Now again, last week was a dramatic move because of the Fed announcement, but do you understand what I'm trying to get across here? Your trading doesn't need to have 700 moving averages and indicators and all of those kind of things. So I'm just going to go through the weekly charts right now, and we're gonna kind of do rapid fire trading, not to steal anybody's. I know Jim Cramer's lightning round. That's not what we're doing. Which this is rapid fire tape reading. That's what we're going to call it. So we're gonna use them in alphabetical order. So what's kind of interesting here, and this is actually I did not plan this. This is awesome. Remember what I just said before about the smart money, the money that all of the money, including us and including hedge funds and algorithms, collectively, when all of that money's on the same side, think about pulling a rope. Everybody's pulling a rope in the same direction. The longer that's happening, that means more money was committed to that idea, right? So if it happens over weeks and over months, you're like, gosh, there's a lot of money in this idea, right? This is a really good deal. A lot of money is in there. Well, look at the airline stocks, and specifically AAL. We only have 1 week of it being obvious. 1 week. This is not well bid. Matter of fact, we went explosion of only 5 days to inside again. So we're probably going to explode out of this again, but let it tip its hand, let it become a big green candle on the weekly candlestick before we start to get involved. Now, could you be getting involved here? Yes, because it's green, but is it a great idea? No. Remember what we said before, and I'm going to go back to Apple because this is a really super good example. Apple was well bid. Higher highs, higher lows, closing above the previous candle. Went inside candlestick here, so maybe you could have took 2 weeks of profits when this changed. Then you went well bid again. Didn't close on the highs, not perfect yet. Perfect. So you see how you start to work your way all the way up, but at a minimum criteria, it's well bid and not trading below the open. So it might have changed a little bit here in this week, but you had 2 really good solid weeks of buying. And is that really the worst thing in the world? 2 solid weeks of buying? But that's the point I want to get across here is, again, how obvious it becomes when you're placing the trades is the difference between the consistency of the buying versus 1 week. That's pretty dramatic if you really think about it. And quite honestly, that's pretty simple, right? So let's go over to a couple other ones. We'll take a look at Amazon. So Amazon actually was well bid 1, 2, 3, 4 weeks in a row with an explosion. And by the way, when you get those explosion type candlesticks after multiple weeks or multiple days, if you're dropping down to the lower time frames, those are usually where the market will take a pause and you can start to look to tighten up your trailing stop, as we talk about in the boot camp, or even look to scale out of the trade. Then you have well bid, change of trend, and then 2 more weeks with an explosion that traded all the way back down. Boeing is another interesting one. So everybody's talking about Boeing, government saving Boeing, all of that kind of stuff, right? Well, how many weeks of obvious buying pressure from the smart money did we have? We had 1. We had 1. And you can make an argument that this second week here is well bid, right? Higher highs and higher lows. But last week, it was trading below the open most of the day, most of the week. So it was not doing what we need to see for it to be an A+ trade. It wasn't green, it was red. So I'm going to leave it at that because now hopefully I just like woke you up and you'll be able to look at any chart really quickly and at least find ideas with well bid. The opposite side, when they're all green, all red, would be well offered. But if you see well bid candlesticks closing on the highs and doing that, just 2 weeks, that's all you need. Or even just 1 big green candlestick followed by another one where it starts to be green. So for example, if this week's candlestick is green in whatever chart you're watching, and last week was also green and closed on the highs, that's a stock that right now has smart money buying in it. And again, then we drop down to lower time frames. We fine tune the entries. We discuss when to add to the trades or possibly get out of the trades. But even if you're a beginner trader, this video should at the very least help you look at a chart and be able to say, okay, at least I understand what I'm looking at. And here's the key. What I showed you in Boeing and American Airlines compared to Apple, where the consistency of the buying pressure from the smart money, from what we call order flow in the program, you'll start to notice, well, this is only 1 week of buying versus this other stock has had money put into it over a few weeks, a month, maybe even a month and a half. Big difference in the allocation of capital from the smart money. So it's our job to hop on the order flow when it's obvious. 1 week, you can still place the trade, but your conviction level is going to be a little bit lower. When you have multiple weeks, there's real money pushing that stock in a particular direction. And then when you have those explosions where you have massive green candles after they've moved a few weeks, that's usually when profit taking comes in, and you'll see a change on the next candlestick where, like we saw in Boeing, even though it was only 1 week, we saw Lulu actually is a better example. After 4 weeks to the upside, immediately the following week, the candle started trading below the opening price, and you could make a decision there that it's not doing exactly what we need to see it do, and then you look to book your profits. It's really, it can be that simple. When money gets involved, our minds start to play games with ourselves and whatnot, but at least you have a structure. And please, the biggest thing I want to get across is that difference between American Airlines and Boeing versus Apple, where it was 1 week, where maybe it's just starting a bigger move, but it's still only 1 week. And that 1 week was not followed up by a good week. So you want to start to see the consistency where you should be able to spot it quickly. Now, if you want to hold trades even longer than that, maybe you don't want to watch, you want to get out in January and get out in, buy in January and get out in March, those are a little bit longer term position trades, and you go to even higher time frame where you start to look at the monthly candlestick and start to do the same thing. And you work your way down. You're like, okay, over the last 30 days or June, whichever one you happen to have, over the last 20 days of June, and then you go down to the last 5 days of June, and then you go down to yesterday, and then you go down to how it's trading today. That's where we really start to learn to read the tape and we make money together. So hope this video helped. Absolutely, please click down and subscribe if you find this video helpful. I hope you do. It would mean the world to me. And if you really want to take this to the next level where you feel like you could read charts but you're not getting paid, absolutely click down and look at the boot camp. This is just such a tiny, tiny investment to get started, and we spend 30 days together, and you can actually see everything where I'm literally calling out my trades exactly when we're getting in them and helping you manage your positions. So have a great day, everybody. Hope this was helpful, and please be safe out there.